the military-industrial complex that has found itself in, God knows how many hundreds of conflicts, whether it be supporting one side, the other, or both, with munitions, that has been centered to holding down the paper price of silver.
Most of the silver that's mined now is mined as a byproduct of other metals, like
Correct.
lead, tin, and zinc, as you know. So there's a lot of recycling going on. There was a company called Ohio Precious Metals that is no longer around anymore, but they were famous for that. That kind of brought it to the mainstream for the stacking community. And so what happened is people are just selling a lot of silver, especially with inflation now that's happening. Maybe even a lot of these new folks that started stacking within the last 3 years during the silver squeeze movement and the like. So I'm wondering if that's a part of it. The other thing I want to comment on what you said about the mining ratio, kind of where it was before. The one thing I always say is that the mining ratio does not equate to where the price should be or where the price is, because of supply demand. Rarity does not necessarily mean that something is going to be expensive. I came out with a silver round, a Salivate metal silver round that has a mintage of 175. Some people would look at it as just a piece of junk. It's maybe worth spot. Some people wouldn't even give spot for it because it has a picture of a kitty on it. So rarity does not necessarily mean that it will equate with what the price should be. However, the Silver Institute has been predicting, we've seen a deficit in silver last year in 2022. But this year, they had projected for 2023 to see a silver deficit again, maybe even more so. And it was an understandable prediction. Metals Focus is the group that does the work for the Silver Institute. But they were wrong. Apparently, when China reopened, they had some problems. And that's where a lot of silver is processed for the microchips, for electronic devices. So the supply chains have not fully come back together again. And I think that's a part of it too. There's so many different aspects of the silver market. Silver market's a very tiny market, but it's a very complex market. And a lot of it has to do with that duality that you spoke of as well too. What are your thoughts about some of that?
Well, you talk about the Silver Institute. Look, silver production is in a deficit at the moment, and industrial investment demand for silver exceeds the mining output. And whether or not the supply chains were disrupted temporarily with China opening up later, I think is just maybe a little bit of a bump in the road in terms of the overall numbers. But, we're talking about a situation where, look, silver is an essential ingredient in the production of renewable energy, and you can't make this renewable energy grid or this energy grid renewable without, talking wind and solar, without huge quantities of silver. The article that I read recently in the Pickaxe, which is really quite interesting. Now, I'm not really going to comment on it other than to say it kind of opened my eyes. I need to really dig deeper into it, to the facts, and they were supported quite well, but basically saying it's the military-industrial complex that has found itself in, God knows how many hundreds of conflicts, whether it be supporting one side, the other, or both, with munitions, that has been centered to holding down the paper price of silver, to suppressing it with leverage on COMEX, where a handful of large commercial banks in essence, represent the largest concentrated short position on COMEX in any commodity traded, and they use it because it is needed to make all of this high-tech weaponry, and it is in the vested interest of this military-industrial complex who were warned about years and years and years ago, and who seem to be at the forefront of all of these conflicts, that has had a vested interest in keeping the price lower than it otherwise should be. Now, again, it's just a theory, but it certainly makes sense when you ask yourself, why the hell would a bank like Bank of America be short a billion ounces of silver in the OTC market? That's a question that a lot of people like Ted Butler and Vic Swear have talked about. But the bottom line is simply that, I think that there is no question that you need silver for these applications, and for whatever the reason, and you mentioned the people who bought silver during silver squeeze. Look, no one's selling silver on this side of the table. No one is selling. Virtually no one is selling the silver they bought, even if they bought it for the wrong reason. And I would argue most of those people did. Most of those people bought silver because they were capitalizing on the momentum of GameStop and and AMC, and they wanted to squeeze the silver market and get wealthy. You don't buy silver to get wealthy. You buy it because it is wealth. It has been wealth for 5,000 years, outliving everything the world has ever thrown at it, from 2 world wars to German hyperinflation to the Great Depression to every pandemic. It is wealth. And it is confusing that it isn't higher when you look at gold, just barely below its all-time high. Silver is under half of its all-time high. And gold doesn't have the industrial applications that silver does, the duality in demand that silver does. And maybe it should be classified rather as an industrial metal, perhaps as a strategic metal. And maybe that's the realization that the markets are coming to little by little or very slowly. I'm not quite sure. But what I can tell you is that I do believe that if you were to take the leverage pricing off of COMEX and have it priced as a cash and carry market, like we see primarily in Shanghai, the prices would be a whole hell of a lot higher. It doesn't make sense to me that you have a handful of banks suppressing the price of silver the way they have. If you look at a chart of concentrated short positions on COMEX, silver is by far number one. And the bigger question is why? Why is it being held down the way that it has been? What other asset can you buy that is below half of its 1980 peak? I don't know of any. Maybe sugar, it's close to it. But other than that, I don't know of any. And an asset that has all of this utility in things that are needed in green and digital and military applications. So, maybe it's the fact that you see large deliveries by very influential companies like BlackRock, or countries like India taking 304 million ounces by delivery last year. Or maybe it's the bleed down we've seen over the last few years off of the exchanges, and there really isn't an exchange that is immune to it. Shanghai, London, the U.S., or backdooring it out of the ETFs. Any way you look at it, the very sophisticated money, in my opinion, is using the cover of outright market manipulation, leveraged manipulation on COMEX to run cover for their acquisition of it. They're draining, if you will, of the exchanges. So these are all really difficult questions to answer, and very fair questions, and I like the pushback, but all I can simply tell you is that there is a major disconnection between the demand for silver and its price. And I think, if you would argue that a lot of the countries around the world, in particular the BRICS nations and a lot of the Eastern countries who are accumulating commodities, not just silver, but gold and aluminum and zinc and commodities like corn and soybeans and wheat, all of these exchanges that offer leverage on them, the countries that are accumulating it aren't bitching because they're accumulating it. I believe at some point you will see a market that no longer has deliverable silver in any meaningful quality or quantity, or gold, and that's when we will see a transition from the Western paper markets, I think, to away from London. Like the Chinese banks just left the LBMA with virtually no explanation. Why? Why is silver priced $2 an ounce higher in China right now, today, and gold almost $100 higher? Is it the beginning of a slight turn up of the arbitrage heat? The bottom line to me is that these countries who are accumulating real assets, real commodities, like Zoltan Pozar says, hey, we're in Bretton Woods 3, a system that will be identified by commodities and transparency, not opaque debt instruments and promises. Maybe they're bleeding dry as much of the available stockpiles of all of the world's commodities, taking possession of them in a manner that allows them to do it without creating too much attention, because they're using the Western suppression to their advantage. And by the time they've got as much as they possibly can, when no one else will be willing to let go of their hard asset at these ridiculous prices, that's when the COMEX, I believe, is rendered obsolete. And that's when you see a new system set up in Shanghai or in Moscow or in Abu Dhabi that lists these things largely on a cash and carry basis without the leverage of futures run by banks, and it becomes more of a realistic price, but not until then. In other words, like in jiu-jitsu, where you use your opponent's leverage against them, that's kind of what it seems like to me here. The East is using the Western suppression, the leverage, against us, and doing all they can to drain the exchanges to whatever degree that they can until there is no longer any fruit left to be picked at those prices, and then the whole system changes. So, I really do believe that, and right, wrong, or indifferent, I do. And, I think that when you realize, and from a retail perspective, my buddy Rick Rule always says that if you take the entire financial matrix of the U.S., from Joe and Jane Sixpack to the Harvard Endowment Fund, it represents 0.5% of assets in this country, and that's probably true. And so when you talk about this large supply of physical metals, none of it is backdated. None of it is dated 2022. It's all brand new stuff that has come out. And for whatever reason, over the last 3 months, now prior to this, you go back till 2020, getting product and getting it at a reasonable price was next to impossible. Paying massive premiums from the primary distributors, we had to pay also. And, as an example, I bought 90,000 Silver Eagles at $9 over the price of silver, and now we're selling them at $5 or less. So when you talk about the premium, it doesn't make sense to me as the owner of a company who got stung with high premiums that we can't hedge, any more than it makes sense to you as a commentator or to the people out there, especially when you hear a guy like me talking about all these shortages and all of the acquisitions and the draining of the supply. All I can tell you is that I do believe it's real, and I think it will happen all at once, where all of a sudden there is a realization that gold and silver, what is available, represents a bastion of safety in a ship that is sinking, that being the USS Dollar. And there will come a time, maybe through problems in the banking system, where 1 out of 100 people know what a bail-in is. And a bail-in was written into law, the Dodd-Frank Act. And you see one of these next bank failures. This last bank we saw on Friday that failed, the Citizens Bank of Iowa. I mean, look, they were lucky. They got gobbled up. Their deposits were gobbled up by a larger bank in Iowa. But there will come a time when there are no banks that want to take these toxic positions, or the depositors of their banks, and that is when they get bailed in. According to the Dodd-Frank Act, that is law. No more bailouts. That's why there was such outrage when Silicon and Signature were bailed out, and the inquiry by the House chastising Janet Yellen for doing that, saying it was illegal. And the Oklahoma senator saying, well, if a bank fails in Oklahoma, are you going to make my constituents whole? And she said, no, not unless there's an uber majority decision of the FOMC, the FDIC, myself, and the president, setting the stage for a big problem in the banks. Maybe that's what it takes to really see the public wake up, because I'll tell you something, a lot of the money, $1 trillion, has left the banks and gone into money markets, because those money markets are paying 5% with daily liquidity, right? So, there hasn't been as much of a focus on precious metals over the last couple of months. All of the money going directly into treasurydirect.gov, even leaving the commercial banks, leaving the repo market. There's a million reasons that I could point to why it hasn't taken off yet in terms of retail. But I think it all boils down to the fact that the people that you and I talk to are the pimple on the elephant's ass. And the elephant hasn't woken up yet. And whatever it takes to wake up the elephant, and I believe it will be a bank bail-in, and you look at all of these banks that were just downgraded, it will set off a chain reaction where everyone runs to the bank to pull out their deposits, which means these banks have to sell their toxic assets at pennies on the dollar. It's a doom loop. One after another will fail, and people will wake up to the fact that bail-ins are law, and you can lose everything. That's when I think they realize that, well, geez, where do I go? Where do I go with safety?